Good morning, everyone, and welcome to Artea Bank Q1 2026 earnings call. Thank you for joining us today. We're very pleased to announce another strong quarter, solid profitability, which was in line with our guidance, as well as an uptick in our loan book growth. Today's call will be led by our Chief Executive Officer, Vytautas Sinius, who will walk, and our Chief Financial Officer, Tomas Varenbergas. My name is Vytautas, and I will be moderating the Q&A session following our prepared remarks. And with that, I will hand it over to Vytautas.
Thank you, Tautvydas, and good day, everyone. Thank you for your interest to Artea Group. And I will kick off with key financial and strategic highlights. So starting with the loan book, the good news is the loan book is picking up. So the first quarter is still on a moderate growth, but we see the quite strong origination in the March and also good pipeline that we see in April and going forward. Therefore, we're expecting that the loan growth will continue to grow on a faster mode. So that's a good news. Also, on the net interest margin, we see that it has bottomed out, and now seeing positive development on the Euribor side and also decreasing cost of funding. We're expecting that net interest margin potentially could be on the road to grow. Still focused on the cost measures, and we see that those elements that we embedded in the last quarter of 2025 and also this quarter, those initiatives offsetting the inflation, and we see that the cost base is remaining flat compared year-on-year basis. Asset quality remains strong, and I would say resilient risk profile of our exposures gives a good feeling that we will continue also with a strong credit portfolio. At least as of now, we don't see any major issues happening, even taking into account the geopolitical environment, which is kind of very intense currently, but we don't see any negative signs as of now in our credit portfolio. Robust capital base still remains with sufficient cushions, and that allows us to be generous on a payment from the capital to the shareholders. So yesterday we paid off our dividends for 2025 of 50% of profit of last year, and we also are continuing our journey on preparing for the rest of this 70%, so means 20% to be potentially paid out as a buybacks. On a strategic milestone and innovation parts, I would highlight that last quarter was important from the Tesonet announcement, and they announced that with the 28% of premium, they're targeting to acquire some shares from the current shareholders, and also expecting to reach the level of close to 32% and potentially in a longer run controlling stake in Artea Bank. Also, we're strengthening our team. So last period Artea was joined by a few colleagues. So important to mention about our CTO, which is kind of new position combining several functions which were separate before. So the product development and the information technology divisions will be kind of under one umbrella, and we see this strengthening of this area will be very important in our longer development of technology and products. Also, good news from the Moody's, who upgraded our long-term deposit to A3 from Baa1, and also made our perspective from neutral to positive. Important development in Lithuania on Pillar 2 reform. So we showed, I would say, quite a good resilience in this area compared to the peers. And some clients also migrating to other investment instruments like Pillar 3. And also we recently launched our, as we call it, Artea ETF Select product, when we selected a number of interesting ETFs for our clients that they can acquire without any fees. So let's move a bit deeper to the Pillar 2 reform, which take place in Lithuania from the 1st of January, and then people, it's the essence of reform that it gives a flexibility for the clients to withdraw the funds during the window of 2 years. And we see that this opportunity has been used quite intensely by some of our clients. So about 40% of funds have been withdrawn from pensions, and it's a good opportunity for the clients to consider other saving and investment instruments. And we see this trend that at least some of the clients are not only going for the consumption needs, but also considering where to invest those money on their own or with their partners. And yeah, we will observe how the situation will develop further. From our side, good news that Artea's withdrawals are the lowest in the market at the range of 35%, while the average is close to 40%. And with that, as already mentioned, we see some dynamics towards the Pillar 3 pension contracts that has increased by 7%, and now is getting closer to, in total, close to 50,000 clients. Also, we see positive trend on our deposit base, since some amount of cash has been placed in the current accounts. Let's touch Tesonet's acquisitions of Artea shares. So we see as a very interesting development in our shareholder base, and worth to remind that Tesonet bought on the 15th of March additional stake in Artea Bank, and that concludes to the stake of close to 10%. And that's the one step. Then they're considering to acquire the stake up to close to 32%. It could take approximately two to 1 year, as you can see on a lower part of the chart, that the permissions that are needed from the regulators are expected in the first quarter of 2027. Then this transaction could be completed, and they also give intentions of acquiring the controlling stake of Artea Bank. So we will see how this evolves further. The pricing is announced, so it's 1.2 multiple to the book value per share, and probably most of the people knows who is Tesonet, but with this partnership, with this shareholding, we see that technological and also cybersecurity, overall web intelligence competences definitely could be strengthened in Artea, and to make our bank stronger with this partnership with a new shareholder. Shareholder structure, as you can see on the left-hand side, as the current one, and projected on the right side. So we see that with this change, the concentration increases. So Tesonet should have 31.7%, Inval 18.7%. EBRD stays as also one of the key shareholders with 7.4%, and the rest, more than 42%, will be among other shareholders. So the concentration level will be slightly higher compared to the current situation. And just to focus a bit more on the Tesonet's benefits that we're expecting to have, is definitely important for us to strengthen our technological platform, on which we are working hardly to change our core banking system and applications and etc. So it's a lot of different systems will be replaced. So this know-how in Tesonet is probably one of the best in a country and in the region. Therefore, their expertise and discussions with them will give even more credibility for us to to complete successfully all the endeavors that we have in this part, and especially not only roll out with a new system, but to prepare for future growth using this technological infrastructure. So this know-how is very important. And also Tesonet is well known on the client experience, how to build the best applications and other solutions that are needed for the clients. And I would say that Artea historically have been a top-notch client service on the physical channels. And now with Tesonet, we're expecting to have the same high experience level on our channels, having them modern and with really interesting solutions for our clients. So with that information, I will pass word to Thomas Varenbergas, who will continue on financial results.
Thank you, Vytautas. Good morning, everyone, and happy to walk you through our financial performance during the first quarter of this year. So to begin, we do see a good stabilization in our net interest income, and our net interest margin has now bottomed out. And looking to the base rates dynamics, we do believe that we are at a good position to improve in that metric. Also, our cost of funding is also repricing downwards, so that additionally gives another reason on better development in net interest income. Net fees and commission income decreased year on year by 2%, basically mainly due to lower bonds origination activities in the Baltic countries. But we do see a good pickup in the pipeline, and we do see and we do believe that in the coming quarters we can catch up in the fees growth. We continue cost discipline. So the measures that we took during the end of the last year and during the first quarter, so that keeps our base cost or recurring cost flat year on year. We're still working on additional measures that long term will help us to be more cost efficient. Given the strong macro situation in the country, our asset quality remains very good. Cost of risk is below 10 basis points, and it's still getting better quarter by quarter. So we have achieved a net profit 15.4 million in the Q1. We still provide also adjusted net profit, so that excludes one-offs. So that's the investments into our IT core IT replatforming project. So without these one-offs, our net profit figure was 17.4 million and ROE close to 12%. Moving to net interest income development. So I said that it already net interest margin bottomed out. Given the recent development to Euribor, so it gives us additional potential. Just to also notice that our baseline budget is built on Euribor 2.15%, so 6-month Euribor is 2.15, and the current level, which is 25 basis points higher, so that gives us additional room for improvement in development of interest revenues. Cost of funding repricing nicely, and so given the lower term deposits rates and the clients' migration from the term deposits to the current accounts gives us also good development currently, and will give good development in the coming quarters. The asset yield decreased during the quarter, but basically it's because our liquidity portfolio was invested into the low-risk fixed income securities. So the asset yield decreased, but mainly we are happy on net interest margin, which has bottomed out. On a loan portfolio, so during the last 12 months, loan book increased by 7%. During the last quarter, the growth was 1%. The beginning of the year was, would say, slower and lower business activity, but towards to the end of the quarter, during the March, we do see a good demand for the credit. Our loan origination levels came back to the numbers that we are happy to have. And by looking to the March loan book growth, so it's already noticeable higher than we had during the last quarter or even the last half of a year. Important milestone, our mortgage book surpassed 30%. So that's very well supports our strategic focus to the private clients, and with a growing mortgage part in our loan book, puts the organization into more resilience and more diversified pattern. Let's move to the net fee and commission income. Well, decreased by 2%, basically mainly due to lower bonds origination in the Baltics. So that's also some seasonal slowdown, also some changes in the markets, but fundamentally nothing changed. We do see a good build-up in the pipeline, and during the second quarter or the upcoming quarters, we believe that we will catch up. Still good fees generation from the asset management, so 2.5 million euros. Looking forward, absolutely with withdrawals from the second pillar pension fund, the asset management contribution to our net fee and commission income should decrease. Let's move to operating expenses. So we are happy with management of our recurrent expenses. So the initiatives that took place and the initiatives that taking place, so they fully offset inflation, and we do have flat cost base change during the last year. All the, I would say, key expense lines contributing, including the salaries, marketing, and buildings. We do have some uptick in the IT expenses, and basically it's due to that we have moved our servers into the cloud based solutions. So that costs us additionally, but it brings organization into more resilient and into more secure space. Looking forward, with increased inflation, we could expect additional pressure, and the recurring cost base could slightly increase. But again, so the measures that we already took, we do also some restructuring costs, but in a longer term, in the second half of the year or even beginning of the next year, we believe that that decision that was made will pay it off. Well, let's move to the asset quality. So, well, given the macro situation in the country and the performance of our clients and the origination standards that we do have contributes very well. So our cost of risk during the last quarter was 6 basis points. If you look to the last 12 months, so it's 9 basis points. And if we see into the development during the last 1.5 years, so we have a good improvement from cost of risk above 30 basis points to lower rate than 0.1%. So we are good on our NPL, especially on the late stage NPLs, and we stand on 60 basis points of a total portfolio. So in overall, we are happy on how our asset base is performing. Of course, additional pressure could come up in case the macro situation would change, given uncertainty that comes from the Middle East. So in case Lithuanian macro situation growth trajectory would be reviewed. So additional provisions from the change of the perimeters could take during the course of this year. But well, so far everything is good in our asset or loan book. On the funding side, so we do have a good development, especially on a cost side. So two factors that currently is happening. So the first is that the term deposits are repricing at the lower rates, and the clients are migrating from the term deposits to the demand accounts, given the low rates environment. Our total funding base didn't change much during the first quarter of the year. So we do expect a little bit different situation during the second quarter, given that the second pillar reform liquidity event took place the first weeks of April. And well, we are happy that Moody's upgraded Artea's deposits ratings and changed the outlook to the positive one, and that was made also together with our senior unsecured debt rating outlook. And finally, our capital position. So we operated very strong capital ratios. So that provides a very solid base or foundation for future growth and capital distribution. So CET1 ratio at 18%. So it's already by extracting or taking out the dividends that were paid out for the shareholders yesterday, but not including the first quarter profit of 2026. So dividends were paid out. We are working on filling the application in order to apply and to get the permission from ECB to get approval for buying back shares in amount of 20% of 2025 year profit. So that's all from my side. I'm giving the word for Tautvydas to kick off with Q&A and closing remarks.
Thank you, Thomas. Yes, I will summarize briefly the key takeaways for the quarter before we jump into the Q&A session. First, on net interest margin, we believe that NIM has now bottomed out, predominantly due to proactive management of funding costs on our side, but also in the last few weeks of March, the arrival rate has picked up. And as you know, we are the bank that predominantly lends on a variable rate. So this change in the base rate will give us a nice additional tailwind and will help us to improve the top line performance going forward. Secondly, we remain very diligent with cost management. Various different initiatives helped us to offset the inflationary pressures and allowed us to keep our operating expenses almost flat year over the year. Third, on asset quality, it remains high. Our NPL ratios and cost of risk remained very low throughout the quarter. Fourth, on financial strength, we're very happy that our capital base remains very solid and robust. We paid out dividend yesterday to our shareholders, and we are arranging a new share buyback program to distribute additional capital to our shareholders. And what's important is that we're maintaining enough flexibility and headroom to expand our lending activity, choose so, and we'll continue to invest in our business to make us more competitive in the market. And finally, our shareholder structure is evolving. During the quarter, Tesonet announced that they're increasing stake in the bank. They also communicated the intentions to eventually acquire a controlling stake in our bank. It's important to note that this transaction in the last quarter was executed at 28% premium, which created a nice spillover effect, increasing our share price, which benefited the broader shareholder base. We're very happy about this strategic partnership and commitment from Tesonet Group. We, with partner of that caliber, we believe that we can achieve more and we can move faster in delivering our strategic agenda. This is it. This concludes our prepared remarks. We'll now move to the Q&A session. I will ask everyone kindly to limit themselves to 2 questions per person. If you have additional questions, so any of your questions remained unanswered during today's call, please feel free to email Investor Relations team and we will get back to you as soon as possible. So the first couple of questions coming from Artea Bank. Good morning, Thomas. So the first question is, do you see any material upside or downside to risks to your 2026 outlook? Is your financial guidance fully confirmed at this stage?
Yeah, good morning, Thomas. I will take that question. Yes, so we do confirm the guidance at this stage. And on upside or downside risks. So, well, on the upside, I would say that our loan book growth picks up and Euribor dynamics or the uptick in the Euribor gives us some upside potential because our baseline Euribor, which is plugged into our model, is 2.15%. So currently, as Euribor is 30 basis points at a higher rate. So in case it will stay at these levels or at higher levels, it gives us upside on the revenue side. From a downside to risks, so well, uncertainty that could come up from the conflict in Middle East could bring what's not plugged in our model that come up from asset quality, from the provision sides. So that's what we are closely monitoring and assessing and what we'll do going through 2026.
Thank you. And the next question is about the conflict in the Middle East. What impact do you expect from the conflict in the Middle East on the Lithuanian economy and on Artea? Do recent yield movements and revised market expectations for ECB rates support your positive outlook for net interest margin? I can take this question. So yes, the crisis in the Middle East is affecting our economy negatively. The increase in fuel prices feeding through the inflation, which is never good when it's a supply-driven inflation effect. Secondly, transportation and logistics is a very big part of our economy, accounting to roughly 10% of GDP. So that sector could also be negatively affected. But it's very important to note that this crisis is a little bit different from the one in 2022 and 23, because electricity prices and other utility prices are not affected to that extent. So yes, the impact on the economy will be net negative, but it's not going to be as severe as in 2022 and 23. And I think the economy is, ready to weather this wild shock with a better place. GDP has been growing very steadily. Consumer confidence in the country is very high, and we have excess liquidity in the system on the back of the Pillar 2 pension reform. But yeah, we'll continue to monitor the situation carefully. And then on the question about yield movements, I think Thomas answered this question. We are the bank that predominantly lends on the variable rate, so any increase in the base rate is net positive for us. Okay, and moving on to the third question. Regarding the strong loan demand observed in March, which products were the main growth drivers and what do you expect for loan growth in Q2?
That's why I will take that question. So actually, our key segments performed pretty well. Our mortgage demands are very high. Corporates also picked up. So a little bit different story with consumer lending. At the beginning of April, some early repayments took place due to the second pillar reform in the country, but actually we have expected even larger repayments. So in overall, well, even consumer lending segment performing and picking up in a growth at a faster pace than we had in January or February. And on the low growth in the Q2, so we'd expect that the first half of this year growth rate could come into 4 or 5% area.
And the next question comes from Swedbank. Good morning, Andrei. The question is, could you please elaborate on the Tesonet's increase in the stake? What's the end game here? To make Artea a digital bank? Do you have any plans to expand abroad?
Thank you, Andrei. Good question. I will take this. Willing to have this take once the approvals are achieved, and we will see announcements from their side. I would say how we communicate with the new shareholder or shareholder who increased the position, that they are also committed to our strategy with how banks is now focused on developing the brand and the proposition for the clients, and with the focus for the retail, it fully aligns with the Tesonet considerations where potential growth is and where we can unlock some new potential. So as we see, we have a strong profitable franchise for Artea in Lithuania, and that's a good base for additional growth opportunities. So we will see together where we can unlock them and how we can go forward. Talking about abroad, current focus still remains on Lithuania, and when we see good solutions working for our clients that could be replicated in other markets, definitely we will consider that. And Tesonet's experience in this area, being global player, could be paramount in Artea's future development, not only in its native country.
Great. And the second question from Andrei is about the branch network and what is the end game regarding this matter. So maybe I'll take this question. Our strategy remains unchanged, that we want to be a digital bank. We continue to invest in both our technology stack as well as physical branches. We want our customers to have the best access, be it digital or phygital, for banking services. Now, also worth mentioning that contrary to common misbelief, our physical branches are not big cost overhead for us. It's less than 15% of total OPEX, and it's very effective sales channel. So, looking ahead, we will maintain the largest branch network in the country. But having said that, it doesn't mean that we're not going to close certain individual branches. We always review our footprint. We want to balance the client accessibility as well as managing our costs. But nothing's changing in the short term. Okay, and the next question is from Anlight. Good morning, Matthias. The question is about the IT. Could you please give an update on your core banking system upgrade?
Yeah, thank you for the question. This year, as we call, is the year of technological transformation, and the organization is fully focused from different angles, from IT colleagues, product development, and the rest of the teams that are involved in this project. So more than 200 people are directly operating with this project. So we're running successfully forwards, and the preparation is coming to the phase when we will start our friends and family testing. So everything goes intensively, but according to the plan. And our last, strengthening of the team are also very important for the success of the project, because we, as I mentioned earlier, we're focused not only for the rollout itself, but how to prepare organization in the future. So definitely the new CTO, also the head of organizational transformation who has joined recently, and also strengthening our IT team is very critical, not only successfully launch this year the new systems, but also to, from the day one, to operate them properly and to be prepared to act in the new technological environment. So far everything goes well, and we'll update you later where we are in this project. Thank you.
Thank you, Vytautas. At this stage, I don't see any additional questions. Want to thank you for dialing in today and for your continued interest in Artea Bank. With that, goodbye.